market updates, highlight of the day here. See what's going on in the markets. February 8th, 2023, if you can believe it. What's going on, guys? Brandon here. Just wanted to give you your update for the day and see what's happening. One of the big headlines that just kind of popped out was Credit Suisse warns that debt ceiling impasse will prove stressful for the markets. Likely, very likely. This is what we were just talking about recently. Why is this spike going on? So let's come back to our handy dandy trading economics to kind of give us the full look at what's going on here. So the U.S. 10-year, we've seen this bounce, right? We've seen this bounce in yields and people selling out of bonds. So people selling out of bonds, driving up the yields in the 10-year Treasury, which is really the benchmark for what's going on in the world. The credit markets, the debt markets, that, like we are talking about, are the biggest market in the world, the debt credit market. So you want to focus on that because everything really is derived from that. And this is why, probably, most likely, I would imagine, that we have this move here because we see some turbulence. So people are out into cash. That's treasuries are generally deemed very safe as well, though, too. However, this again can lead to other speculation of what's going to happen the rest of the year, right? What is going to happen? The yield curve being inverted. All the we're so in. Not to get into crazy detail, but because of well, you can see it right here. All of the bonds, the yields are inverted, meaning the lower end is higher than the longer end. It should, if you lend someone money, you should be getting more yield for the longer that you let them hold it. But it's not the case, and that's really usually spells recession or worse. And when this happens, and this has been going on the last 6-12 months, so we're really kind of at the precipice here. What's going to go on? Calm before the storm. Call what you may, but we see these gyrations again. The bond market, like you see this, you see what's going on here, and you see all these crazy gyrations. That should not be happening in the bond market in general. The bond market is generally a stable market. The U.S. Treasury market is very stable because you have people that are. The American worker is a very reliable worker. The entire economy is very reliable in the sense that people are going to show up every single day. They have the dollar reserve currency. People are going to show up every day and they're going to pay their taxes. A lot of other countries around the world, you can't say that. You can't say people are going to show up reliably. You can't say they're going to legally pay their taxes. They don't have a currency that's in demand. It's all over the place. Currency just devalued theirs. Stole 90% of their citizens' wealth. We just did a video on that the other day, so please go check that out. That has happened in America before. Hasn't happened in a little bit, but it has. We've had soft defaults. We had 2008. We printed, $4 trillion. We just printed 10 or 15 trillion in the last couple of years. So it's happening. It's happening to Americans too. It's soft defaults, they're called, and to be able to pay their obligations. And we just don't see it because they don't call it a hard default. They don't call it a currency revaluation. They just say, "Hey, we're printing currency. We're doing quantitative easing," which, as we've seen now, eggs, instead of being 70 cents a carton, are now $7 a carton. So they go up 10x our pricing or whatever it might be. So we have this going on. We have soft defaults going on. We've talked about this playbook for a long time, financial repression. The IMF has talked about it, what they will do, what governments will do to get out of debt. Ben Bernanke here, the old Fed head here, talked about deflation, how it can't happen here. They do not want deflation. They do not want the 1920s, 1930s all over again. They want hyperinflationary crash, a hyperinflationary depression. That's what they would rather have. That way they can kind of obfuscate what they're doing, their own falsities, their own actions, and cover it up. And that's the way they're going to go. That's the way the governments have generally gotten themselves out of debt. Lynn Alden talks about it all the time in the 40s. That's what governments did as well to get themselves, namely America, to get themselves out of debt, is hyperinflated their way out of it. And there's different types of hyperinflation. It's not Weimar Republic or in Zimbabwe there's $100 trillion bills. However, they just really ratchet up their debt monetization. And that's going to happen here again. So we have to be prepared for this. That's why we talk about independence, resilience here all the time, getting into your own monetary system, becoming your own central bank. Bitcoin, gold, silver, and food, energy, storage, water, firearms, security, land, and community. Building like-minded people. That's why I love what we do here. So that's the 10-year. And again, it's at 3.65. It jumped up a little bit. And as we can see here, we got to monitor that because this drives everything at the end of the day. So obviously, what's going to happen to the DXY as well? Same thing. You've seen this tick up. People driving out of these assets and holding cash right now. That's why you're seeing cash being a little bit stronger here, obviously, than it was over the last few weeks. This little jump up. So is it breaking out of a trend? We shall see. We got to keep an eye on this. And we will every day, obviously. So stocks, as you can see, have been kind of jumping. Let's see here. We'll do the S&P. So they've been kind of grinding a little bit here, and they're down a little bit today. Obviously, we can see these gyrations. You can see how it's all over the place, right? And it's a derivative of the credit markets. This is why we have to be careful with what's going on in the credit markets. These freezes in the credit markets, 2007, 2008, and then September 2019, these freezes in the credit markets, gas not coming out of the pump, credit cards not working, the repurchase market's freezing up. This is why everything freezes up and we have to print and bail people out. Too big to fail, or injecting trillions of dollars into the market. It's because these back-end facilities, these back-end banks, commercial banks, the lending, someone doesn't trust each other, and all of a sudden overnight the lending rate goes from 1% say to 10%, and all of a sudden someone's calling someone's bluff, and they say, nope, I don't believe this. There's something going on here, and then that's when the Fed, they have to come in and inject all this liquidity. So if it sounds like a complete scam, it sounds like just a bunch of hocus pocus, when's the last time you heard that, then you'd be right. And this is why we need to protect ourselves. This is absolutely why. Bitcoin, again, is really just hovering around that $23,000 mark. It sniffs out a lot of this. Same thing with gold and silver. Gold and silver and Bitcoin are your kind of early warning indicators. And gold and silver are still down a little bit. They're up on the day, but they're down over the last week or so. And they got hit. We talked about why they were over the last few days, potentially as well, and what's happening. Oil has jumped again today. So this is, again, another good thing for the just parts of the economy. However, for other parts, inflation, things like that, if that goes into the 80s, 90s, 100s, and above, then it creates more upward price pressure. It doesn't create inflation, but it creates upward price pressure on everything. So that's something to keep an eye on. As we say, the kind of the trifecta to look at here are the DXY, the 10-year, and oil, and then Bitcoin, gold, and silver are your early warning indicators to see what's going on as well as liquidity goes. So that's why gold and silver and Bitcoin are generally been up really over the last few months, because all the central banks, as we've noted before in one of the last videos, are net positive QE, net positive printing. Even though they've been telling us we're raising rates and we got to get inflation down, they've been in the background buying up tons of bonds and driving rates down and injecting liquidity into the fractional reserve system somewhere. They're injecting into the market. So that's gold and silver. Crude, like we just said, we went over the DXY, talked about everything. So we are rolling here. So keep an eye on those indicators, and we will here every day. Bitcoin is running, as we can see here, Clark Moody's dashboard, or you can check out Price in Bitcoin, Phenomenal Sites, Time Chain Stats, or my buddy Ant, timechainstats.com. You can see all of the stats and the exahash, the power of the network, the all-time hash rate. So again, these have been going up and up over time, all through the bear market. We've had higher and higher hash rates, higher and higher layer 2 network activity on the Lightning Network. So just super strength coming from Bitcoin. And I want to see inflation. We always look at these every single day, about 15% inflation. Again, I was just talking to some people about when Bitcoin gets up into here in the top 5, top 3, boy, are there going to be fireworks when that ends up happening. People are going to lose their mind. And most importantly, we want to understand the framing for all this. $31.5 trillion, government can't do anything about it. Government can't do anything. So they're going to do the financial repression. This is why I talk about this all the time. The average citizen owes these numbers right here, $94,000. The average taxpayer owes $250,000. How do you think they're going to pay for that? How do you think anyone's going to pay for that? Well, they're not. It's going to be inflation. It's going to be print our way out of this. So you have to be in alternative assets. You have to be outside of this. This is where getting a couple % return in the stock market in your 401k or whole life insurance or something like that, it's going to be very difficult. It's going to be very, very difficult over time to beat 10% inflation, 15%, 20% inflation. You have to be thinking outside of the box here. Whether it's being in assets that are your own central bank, Bitcoin, gold, and silver. You can get into real estate. We've done real estate a lot over the years, and an infinite return where you can fix houses up and then refinance them, pull all the equity out and put debt on it. That's great in inflationary times. It's just the problem is most people can't do it. That's why I have stopped talking about it as a reason to do things. I've taken the route of educating people on money, because that is the surest way to reduce the wealth gap over time. And then here's the mempool. Actually see the mempool. I added this in here as well, which I probably should put this over here. So Bitcoin is running. We've confirmed it's here. We'll refresh it just in case, but it is running. We see it working. This is beautiful stuff. Seeing the network. You can't see this with the Fed, guys, right? You can't see this with the Fed. Here are the blocks filling up. Seeing exactly what's going on with the network is the most beautiful thing. Can't see this with the Fed. Those sons of guns. And then here you are, the dollar against Bitcoin. Been destroyed over the last 7 years. Absolutely destroyed. And we always show this too. Your eggs or you can substitute anything, right? You can substitute anything here. Cars, houses. This is your life on dollars. More and more expensive over time. Infinitely more expensive, going parabolic. And conversely, here's your life on Bitcoin, just over the last 7 years. Getting cheaper and cheaper and cheaper. You're buying whole farms at this point, let alone eggs. So I appreciate you guys. That is the news of the day and really kind of the big stuff going on in the market. So tune in here. We do the market update every day, obviously, see exactly what's going on and just get a little perspective. And to really, repetition is how we learn. So this is, again, how we learn, playing professional hockey, playing sports, music, art, whatever it is. Repetition over and over and over again, right? This is how we learn, seeing what's going on, reminding ourselves, oh, the Titanic is truly going down. I need to get off of that ship and get onto the Bitcoin life raft. I need to get off on a life raft, a deflationary monetary system where I can actually have a controlled experiment and know what's going on in the world. So I appreciate you. Your time and energy is the most important asset we have. Please like and subscribe to this. Please share this out to someone who you think might need to hear this or see this. Comment with what your thoughts are on what's going on. We can battle it out there, and I look forward to seeing you on the next one.